Welcome to the Economy Magazine here at I-24 News. I'm Natalie Ehrlich here with a daily recap of the world's most fascinating stories in business and innovation. Coming up, Africa's leading economy, Nigeria, remains challenged now by a number of economic headwinds. Will the new president be able to reverse the course? And no shortage of controversy at FIFA. Some question how the leader of the world's football governing body remains at the helm despite a massive corruption probe. But first, let's start with the headlines. Well, crude oil prices fell on Monday on expectations that OPEC would keep its output unchanged. The 12-member cartel meets this Friday in Vienna. Last month, OPEC raised production, stoking fears of market oversupply. But while OPEC expects prices to improve from their current levels, U.S. bank Morgan Stanley projects that in the second half of the year, crude will decline. Still, a return to this year's lows is said to be unlikely. Chinese factory activity edged up to a 6-month high in May, though export demand fell again. The improvement is expected to give world markets now relief on Monday, but worries about a protracted economic slowdown in China remain strong. Similarly, another survey on services firms showed growth in that sector dropped to a low not seen in 5 years. In the coming months, Chinese authorities are likely to inject more stimulus, even though interest rates have already been cut 3 times in the past 6 months. Lloyds Banking Group will sell shares to private retail investors over the next 12 months. The British Finance Ministry plans to extend a trading facility enabling the bank to sell more shares until the end of the year. Britain currently holds almost a 20% stake after bailing out the bank during the financial crisis, costing taxpayers there some £20 billion. Britain originally had a 41% stake, but after a series of share sales was able to bring that figure down. And Germany's EU commissioner offered words of encouragement for Greece on Monday, saying it might still be possible for the debt-stricken nation and its creditors to reach an agreement this week. Still, he did downplay expectations of a breakthrough after meeting with the German Chancellor Angela Merkel, French President François Hollande, and the EU head Jean-Claude Juncker. Athens and its European creditors have been in talks on a cash for reforms deal, but Greece is still on track now to miss a self-imposed deadline for Sunday. Nigeria has earned international acclaim as Africa's #1 economy, but it currently faces a number of economic challenges. Even the country's new president says the economy is in deep trouble. Daniel Roth reports.
Incoming Nigerian President Muhammadu Buhari is stepping into office at a hard time for Africa's largest economy. Corruption and terrorism have been ongoing, and beyond that, the country was rocked in recent months by massive fuel shortages in the wake of a strike that essentially brought all business to a standstill. Since early March, with the currency hitting record lows and slumping global oil prices, national fuel importers had stopped delivering gas to put pressure on the government to pay back $1 billion of debt accrued during the outgoing administration.
Oil marketers were afraid that if they didn't get all their money, the new government was not going to honor the commitments. So they wanted to extract as much as possible under this administration before Buhari comes in.
Though the strike was called off last week and gas stations are refilling their stocks, the situation was dire. Airlines, mobile carriers, and banks were all on the edge of closure. Nigeria, which has boasted 7% growth annually over the last decade, is Africa's biggest oil producer with 2 million barrels a day, but imports petroleum as well because they lack in domestic refineries. AFP explains that the government pays importers the difference between the lower consumer price and the real market price, which many say is a fraud-laden system.
We know there's a lot of corruption in the oil industry. We expect that the first few things they should tackle is corruption and power in the country. It's a major issue.
And the incoming president says he aims for change during his 4-year tenure.
Our long night has passed, and the daylight of new democratic governance has broken across the land.
Buhari, who ruled Nigeria after a coup d'etat from the end of 1983 until 1985, is seen by many as a leader equipped to take on the Boko Haram threat the country is facing. Meanwhile, questions remain about his ability to govern on economic fronts in a country that sorely needs it with a 30% unemployment rate.
And now for a look at what's new in the markets this week with financial currencies expert Joel Kruger.
Hi, Natalie.
Welcome to our studio. Thank you for being with us. So what's on the global economic calendar this week?
So this week we have a pretty stacked economic calendar. We have a number of central bank meetings. We're looking at the RBA, the BOE, and the ECB are going to be meeting this week. And then on Friday we have the monthly employment report out of the U.S. So those are going to be the big events to watch this week.
I see. Well, we have seen the U.S. dollar improving here. Can we expect a rate hike?
I think we can. I think that the market was a little bit uncertain going back several weeks. The market had seen some bad first quarter data, and there was worry that this was going to sort of spill over into the second quarter. And we're starting to see a pickup in the data, and that's sort of reassuring the Fed and the markets that the Fed's going to probably move in September to hike rates.
Well, staying on currencies now, the yen has seen some weakness. What's driving that?
So the yen is a favorite trade amongst the institutional market. It's a great trade. When you talk about monetary policy divergence, there's no better trade than looking at the divergence between the Fed and the Bank of Japan. And so this is a trade that's going to continue to drive. We've seen a breakout in dollar yen over the past week, and the institutional money continues to flow into the long dollar trade on the favorable interest rate differentials.
What about Greece?
Greece continues to be an ongoing story. Over the weekend, we saw the interior minister in Greece make some comments about potentially, conceding a little bit and coming to a deal, but we haven't seen that. We've seen a lot of back and forth, and we continue to wait. And the June deadline for a repayment of the IMF loan is coming, and we need to see how things are going to play out sooner than later. And either way you look at it, it's going to be a little bit messy going forward.
Well, what do you think is actually happening here with Greece, with Syriza in the helm of power? I mean, do they really want to make concessions to Europe?
I think that Syriza had a platform, an idealistic platform when they came into power where they didn't want to make concessions. They have this strong austerity platform, and this was something that they were very strong about. But, they're in a tough spot, and as things drag out, they're being strangled, and they're going to need to make some concessions, unfortunately, if they want to continue to stay in the Eurozone and sort of move forward. So I think that a deal is going to have to be had.
And what's your take, though? Can we see a Grexit here, or are they actually going to stay in?
I'm hoping that they stay in. I'm hoping that a deal is reached. It won't be an easy road for Greece if there is a deal, because they're going to be having to pay back a lot of money. They're getting a loan to effectively pay back more money. It's going to be a long road ahead, but I think it's the best solution, and I think that it's the solution that we need to see.
Well, what about the U.S. stock market? What's your projection for equities?
I think if you're a long-term investor, then if you wait a little bit, there's going to be some great levels to buy into dips, because I think that the market's exhausted at current levels. As a short-term trader, I'm looking to sell futures here. I believe that with the Fed on the verge of raising interest rates, it's going to take away that incentive to be long the free money. It's coming off the table, and we're starting to see the market exhaust a little bit, and I think over the next several weeks, we're going to start to see the market turn lower significantly. So
you're pretty bullish right now. You would encourage people to invest now as opposed to later?
Well, I haven't been bullish, I would say. I've actually been cautious over the past several months, and now I'm turning bearish over the past, I'd say, 3 months. And I'd recommend, if you're long, to be taking your money off the table, and if you're short-term, to be considering playing the market to the short side. Okay, well, a cautious view here. Thank you so much for joining us. Joel Kruger, we always do appreciate it here at I-24 News. Good to be here, Natalie. Moving on now to the rest of our coverage, FIFA remains in the global spotlight for all the wrong reasons. A number of senior officials arrested on corruption charges. But despite the controversy, the group's president remains in power. Anthony Lesme explains.
Joseph Blatter was again elected to the head of FIFA, a new snub to the organization's critics. He has not been charged by the U.S. justice system, but corruption charges are hanging over him. Never mind that the man nicknamed the Godfather, Don Pallone, is now playing the White Knight.
Ladies and gentlemen, I thank you. I thank you that you accepted me, that for the next 4 years I will be in command of this boat called FIFA, and we will bring it back.
For now, Blatter is swimming in troubled waters. He faces judicial problems with the U.S. Department of Justice. After suspicion of bribes paid by 2 U.S. banks, J.P. Morgan and Citibank, 14 people have been charged. The prosecutor, Kelly Currie, is also looking at the decision of awarding World Cups in 2018 to Russia and 2022 in Qatar. Blatter is already facing the wrath of sponsors affected by the scandal. Sponsors like Visa and Coca-Cola will not be pleased if further legal proceedings are announced.
As a sponsor, we expect FIFA to take swift and immediate steps to address these issues within its organization. Should FIFA fail to do so, we have informed them that we will reassess our sponsorship.
This lengthy controversy has tarnished the mission and the ideals of the FIFA World Cup, and we have repeatedly expressed our concerns about these serious allegations.
They want to couple their brand with the values of integrity, of truth, of fair play that are inherent to a sporting event. So when those values are damaged, they have to rethink what they're doing.
Other sponsors have already decided to drop FIFA. After the corruption rumors, Sony and Emirates Airlines did not renew their contracts with FIFA in 2015. Other companies are also worried about their images, and rightly so. Internet activists have been targeting companies with anti-logos, such as whips for McDonald's, handcuffs for Coca-Cola, and graves on Adidas, to bring shame to sponsors for still sticking with FIFA after the presumed death of hundreds of immigrant workers while developing infrastructure in Qatar for the World Cup. For now, FIFA has no risk of bankruptcy. Joseph Blatter can count on a war chest of more than $5 billion.
And now for a look at some other stories and events from the World Press and Media Watch. Thank you, Daniel, for joining us today.
Thanks for having me.
What do you have for us?
We're starting in China, actually, where, surprisingly, there's a story of one factory that currently has 2,000 workers, and they're going to try to drop that down to 200 workers by throwing in 1,000 robots. Their idea is a zero-labor factory. This has been happening all over the world as technology gets better. We're seeing, for example, the back end and front end of fast food restaurants experiment with this in America. You're talking about 3 million people who are working in the fast food industry. They're also trying with truck driving. It's really taking the world by storm.
We have heard in pop culture of this projected trend that robots will take over all our jobs. I guess it's happening first in China. It is surprising here. Why is it happening there?
Well, there's two reasons. One of them is a global reason. This is why it's happening everywhere. Is with robots, you don't have to be worried about unions. You don't have to be worried about paying them at all. So that's number one. It's cheaper. You invest in robots on the front end, and you've got free labor for an indefinite period of time. The second reason, and this is specific to this story, is that a lot of Chinese workers in large coastal cities are finding that the cost of living is going too high too fast as the middle class grows there, and they're finding that they just need to get back to the places they come from the small villages inland. So we're really seeing this kind of shift take on two. One of them is the need of the workers, and the other one is the desire of the companies.
So it's actually possible in China to have a labor shortage. I never thought that would be possible.
Yeah, absolutely. But it's really a question of technology sort of pushing forward, and there's a good side and a bad side. One of the sides is of course good, that no longer do we have to toil in jobs that we don't need to toil in anymore.
So we actually don't want the humans to do these jobs, you're saying. So these jobs were just destitute, terrible jobs that nobody really wants to do?
In many cases, absolutely. Now, at the same time, we must say that, in Japan, they're experimenting with robot news anchors, so let's not get ahead of ourselves. They're not all jobs that no one wants, as you and I can attest to, but as technology shifts and we carry forward, we're going to see labor markets change. We're going to see people talking more and more about basic incomes, about sort of a mandatory minimum money that people need to survive that's decoupled from the labor you're putting into the market, things like this.
That's really interesting and fascinating, and I certainly hope the robots don't come to Israel anytime soon. But what else do you have for us?
The Financial Times reporting on update in America. Right now there are laws coming through that may place boycotts on boycotters. So companies that are boycotting Israel or have divested money from Israeli companies in Illinois and Tennessee and a few other states, and we're starting to see on a federal level that these laws are starting to be talked about in very serious ways that are surprisingly going to punish companies, fine them major amounts of money for taking their money out of Israel. Now, this is pretty unprecedented, of course, with anti-apartheid boycotts in the 1980s primarily. This took America by storm, and in the course of just a couple of years, the president changed his tune. now we're seeing actual laws being put in place to kind of silence this kind of protest.
So this is coming from a grassroots local level.
Well, it's coming on right now. It's a state level. It's not federal, and it's also not differentiating between the BDS movement, which is sort of talking about boycotting Israel as a whole, and the boycott movement, which is talking about boycotting of settlement products, which, as the Financial Times reports, by and large around the world are recognized as a obstacle to peace. So it's one of the interesting things in the U.S. Government, in state governments right now, and again, they're talking about it on a federal level, that we're seeing a divergence happen across from the opinion in the world.
Indeed, that is quite a divergence. Well, that does wrap up our program today. Do stay tuned for all the latest economic news tomorrow. Same time, same place at the Jaffa Port. I'm Natalie Ehrlich. Thank you.